That's it. There we go.
Okay. So you're getting to see which niche and which area would be a viable business. So far, it's trying to find which niche. Still finding which area to go into.
Yeah.
So I am thinking about getting on the platform on the fix and flip section
Okay.
where I'm able to get leads from another Gator partner. I'm going to look at doing a JV with him. He's in California.
Okay.
And he has a real estate brokerage platform with a real estate company that's able to give leads on single family homes that needs fix and flipping.
Mm, okay.
On the other side, there is a platform with Jerry Norton. He is a pretty large fix and flipper.
Yeah.
He's on
I know.
YouTube,
Yeah.
just like,
I've got a
hey,
number of his courses, so I've known him for a long time. Yeah. So I know.
yeah. So he has a program where he says that he is willing to buy and purchase these properties and he'll fix and flip it.
Yeah.
And he'll pay you,
$10,000. Yeah.
$10,000 if he
Yeah.
finds that in his buy box.
Yeah. Good luck
So
with
I thought
finding that.
maybe we could try that and see if it goes anywhere.
Yeah. I tried that for a couple of years, John. It hasn't worked. He's very strict. He needs 5 comps in the immediate area, and the market has not been open to that, so it's very tough. But you could try it, see if you succeed.
Okay, so you're saying that it's a tough market in terms of fix and flipping?
No, I'm saying it's hard to find Jerry Norton's 5 comps in the area in the today's market. Meeting Jerry's criteria to get that 10,000 is extremely challenging.
Oh yeah, yeah. I would think so. It's probably his buy box criteria is hard to find, I guess, huh?
Correct. It's extremely tough. So, um, I mean, it's okay to try, but I mean, I'm just saying that it's. I haven't found it in 2 years, a thing, and I'm looking at houses every day. So, um, it's very tough. So, but anyway, try it. I mean, there's no skin off your nose. Well, apart from the entry fee, I think
Well,
it.
yeah, the entry fee is
Yeah, but
about maybe $1,500 to
yeah,
kind of be a member.
it is. Yeah.
Yeah, but I really do hate investing in stuff that doesn't seem to work or is expensive, you know?
Yeah, it hasn't worked for me. So, but yeah, yeah, you
Oh,
never know.
okay.
It might work for you. His his criteria are very, very hard to meet. Um, he's a luxury fix and flipper anyway. I don't really know why he's after these silly little houses. I'm a
Oh,
bit confused about that. He does $1 million fix and flips.
so it's
That's
high-end kind of properties he's looking at, luxury properties?
Yeah, he looks at luxury properties. So, um, and when it comes to luxury over 1 million, because he does 3 to 5 million type of thing. When you're looking at luxury, getting that man, I don't know how many comps he wants for those because I haven't looked for that in those in that luxury market. But
Hmm.
for the single family homes, it's very tough to find the 5 comps he's looking for. It's just very hard. So
Okay. So anyway, wholesaling is pretty tough because you gotta go out there and find a whole bunch of wholesalers and leads.
yeah,
That means you gotta put in a significant amount of money to get in touch with these wholesalers. Uh, and Gator lending, I haven't built up a lot of credit yet. So, but I've been hearing some stories that a lot of people have been lending and then all losing money. So I guess
Yeah.
there's a certain kind of magic formula. I wouldn't say magic, but they're missing something that they're losing money. They probably don't know what they're doing.
Correct. Yes, they don't follow the instructions. There's lots of instructions when it comes to gating, so lots of minefields that you can fall into and traps. So you're exactly right. Yes, yes. So you have to be very careful, very hard. But one thing I came across only last week, in fact, was Legal Shield. And I've signed up with Legal Shield. It's an attorney in your back pocket. So if you ever do get trouble, even if you follow all the rules, you still might lose. So having an attorney in your back pocket for a low monthly fee is incredible. Because that's the biggest thing with real estate is your losses. The first time round with me, if you watch my story, I lost so much money, six figures, lost my whole business altogether in the end
Yeah.
because I couldn't afford to put an attorney on retainer.
Wow.
Now, if I had known what I found out last week, that Legal Shield would protect you and you can call them as many times as you like, I would still have all that property today.
Yeah, I heard of Legal Shield where you get legal advice based on what subscription you have. But
Exactly. Yeah.
litigation costs time and money,
What's
and
that?
yeah, and all the efforts that you got to do at taking care of your losses,
Yeah.
probably a very difficult situation to be
It
in.
is, it is. But the nice thing about having legal share, you can talk to an attorney at the drop of a hat. As soon as you made any losses or anything, you can get that legal advice for a really low monthly fee. For business, it's probably the cost of a date night. A hundred and something dollars, and that protects you. And you can call them as many times as you like. So it's cost of doing business. It's way cheaper to protect yourself. And if I'd had it, as I say, I would have had I still had all my properties because, I mean, there were clear cases. I was losing money, tenants not paying rent, for example. Well, when I got to court to throw them out, they're represented with legal aid. I didn't have an attorney. So with Legal Shield, you'd have an attorney to do that. And so I wish I'd known about Legal Shield. I only joined them last week. Well, actually, it was the 12th. And I'm blown away. I now feel so much better about my real estate investing because if something does go wrong, I've got a legal representation, you see.
So they give you advice in terms of legal, but in terms of picking the right investment or the right lending, you still have to do your own due diligence.
Oh, of course you do. Yes, but I'm just saying
Yeah,
at the end of the day, if you need an attorney, and in real estate, you're going to need an attorney at some point, even if it's to look over a deal, right? The paperwork and things to make sure that everything's done correctly because so much paperwork's done wrong. And that's what the attorney's all about. So I mention it because I'm thrilled to have discovered them, and all the stories they can help with and everything else, on both on a personal and a business level. So it's very effective.
yeah. It's just probably more cheap or cost effective than hiring and talking to a new attorney every time, which is
Correct.
expensive, which bill by
Yeah.
the hour. So
Yes, exactly. The other thing about it I like is the company are paying the attorneys a retainer. So they treat you like royalty, right? If you pay a small retainer to attorney, then you're a small fish. Go away. But it's a bit like Elon Musk, right? They get sued every 5 minutes, right? They have an army of attorneys on retainer. So, it's very effective and they treat them really well, right?
right,
So anybody with a lot of well, this company, Legal Shield, they put the retainer up for us. So we
right.
pay a monthly fee. And so we get much better service.
And you find that the lawyers are pretty useful and competent and helpful and get things done, I guess.
Exactly. Exactly.
Okay.
because they've already been paid. You see, their pay thing isn't in their mind. They've been paid already.
Okay.
Yeah, so it's
Oh,
very effective in that way, you know.
that's good advice. So
And
coming back to multifamily, my goal is to purchase, well, 100 units is great, but I don't think I have the experience to be able to go out there and acquire 100 unit without some,
right.
advice and experience from you. You probably had more experience, so that's one thing. My goal is to try to get as many multifamily properties, but I'm starting off ideally in Texas if I can.
I like Texas, yeah. I like
Yeah.
Texas. Apart from the hurricane-prone areas, further north is better because of the insurance. Now I'm bringing out a couple of
Well,
books.
yeah, I was
Oh,
thinking
I
it
got a
was
couple of books.
San Antonio
Yeah,
to Austin, the corridor, but
yeah. Okay. I'm bringing out a couple of books that might help you. These will come out next week. Investing in large multifamily and demystifying real estate investing. I put a link in the chat, by the way. That is, if you're interested in looking at the legal shield for your business, take a look if you would like. That's my website. So if you want to be a customer, and there is a business opportunity, but with the multifamily, I've got a YouTube channel. Let me bring up. I've got the playlist for the educational side of it, and it'll go into all the details. Let's see. Here we go. This is the playlist to my 21 videos on multifamilies. So you can take a look at that. I've got they're anywhere from 5 to 12 minute videos on lots of different topics.
just
So
give me a minute while I try to download that link while I am online.
yeah,
I gotta copy this link somehow and then save it.
yeah,
Okay, so when we get back to the Zoom here. So, I mean, with how do you get back to the Zoom? How come I don't see you?
I see you. Um,
Okay, anyways, to do it with seller financing, I don't know how
Hang on, Joe. Hang on.
easy it is to do it that way. Uh, can you hear me, Graham?
No, you faded out there. I'm sorry. Could you repeat that?
Okay. How easy is it to do seller financing? I mean, with these large multifamily units.
It's very, very rare, but it's because these large multifamilies are usually owned by an LLC, you know, so and experienced operators, um,
Okay.
and investors. So, but it's not impossible. The main thing with large multifamilies is capital raise, you know, and sometimes remember they're commercial loans, so
Yeah.
lots of commercial loans, you can find assumable commercial loans, so that might be possible. But the seller, the it's usually a syndication of this level, 100 units or more, and so the investors need to be paid out. You see, so the seller financing is extremely rare. It's not impossible, but it is very rare. Okay, so that's a little bit, that's the only con, as it were, with large multifamilies, is the creative is less likely. There is assumable, of course, and it's not impossible. But usually you want to raise the capital from your investors, you know? So
So in your
that's a really
case,
good question, you know? So
in your case, are you um well, you're obviously raising capital. Are you doing syndications for all your
yeah,
acquisitions?
yes, it's syndication. So as a gator, what you would do is you squad up with other investors come in as a business entity. You would roll your stake into an LP position. So you would be paid your fee at closing from the acquisition fee. And then you would have quarterly distributions as an LP and a share in the profit at the end of the project, which is 3 to 5 years. So you'll have three streams of income. So it's a very good way of building up that steadily monthly income because as a gator, you're only good as your last sale. And this is a good way of wealth creation because you're getting the quarterlies and the share of the profit at the end of the project. Yeah.
So where do you get all your investors? I mean, you've set up the LP and the GP, but then you still got to go out there and get investors, though.
Correct. That's what I'm doing now. Every day I'm talking to people in the community, building up my network.
Okay, that's pretty competitive because there's a lot of people out there trying to get investors for the LP and GP. And
It's not too bad because I'm only doing 1 or 2 deals a year, you see, and
oh,
so it's not too bad at all. And there's more money right now waiting to be deployed in real estate than at any other point in history. Around $23 trillion is waiting to go into real estate.
so how can I don't know how to get involved with your LP and GP because right now my networks I do have quite a few lenders, private money lenders, companies. They're not individuals that will finance the multifamily properties. That's not a problem. But in an LP and GP kind of situation, I guess I don't have a huge network of investors, which, I'm trying to build up, but it's not large enough to even,
Hmm,
get LP or GP going.
I understand. Yeah. But you will come across them. You'll come across and you'll think, oh, what was that old dude's name? Oh, Graham. Okay. And then you may never know when you come across somebody saying, I've got $500,000 I want to deploy into large multifamilies. Do you know anybody who's looking? And then you got a connection. Yeah. Then you can squad up with them, you see, and you be a partner and say, I know who uh, I know a guy who's doing large multifamilies. And then you would have a share in the profit just
I
by
see.
finding him, you see. So,
So really, I'm acting like a broker. I mean, I'm not actually being in the LP and GP. All I do is find someone with the capital and get a share of the profits.
yeah.
It's like always just being an
That's
independent agent in a
that's
sense.
right. Yeah. Pace talks about that. That's what he does. He doesn't put his own money into these large multifamilies. He inserts himself into the deal by making it happen.
Right, right. And then I guess eventually we could work together to set up a LP and GP if there is a sufficient capital uh, instead of just being a broker, maybe look at being
Everything's set up beforehand, John. So yeah, you need a sponsor, you need an asset manager, you need capital raisers on the GP side. And then the LP side's enough capital to cover, the purchase of the property. We do we do a commercial loan for the bulk of the project, usually 70% at least, and then 30% on the raise capital, 30%. So we get paid at closing. We get an acquisition fee of 5%, which is very good. So if you're buying a 20 million, that would be $1 million at closing. So if you were helped in the acquisition, you get a share of that, for instance. Or if you're doing the LP side with other gators and come in as an entity, you will get your fee at closing out of the acquisition fee. And as I say, get quarterly distributions and a share in the profit when we sell the project.
So you're obviously able to set one up uh if I, ever need to do that. You're able to do that. We can work together on that, I
Yeah,
guess.
yeah. I will
Okay.
always know, well, I won't always, but initially I need a sponsor. Once I get a sponsor, and I know who to go to, by the way. I've already know who to use, and they're
Um,
fantastic. So
what's the criteria of the sponsor usually? What are some of the things you need to look for?
a sponsor needs to have experience in a similar asset class. So if we're buying a 100 unit, he needs to already have experience buying a 100 unit or more. He needs to have 10% liquidity in the bank to sign the thing, and enough years of experience, at
Okay.
least 2 years experience in those asset classes. So that's qualifications for a sponsor.
And you're able to find these sponsors, right?
Absolutely. I've got a company that does it, so I just have to contact them. It's very easy.
Okay.
Yeah. Yeah.
So what I'm going to do is let me figure out, what to do, because then in that case now the only immediate action is to find an investor in the multifamily business units, and then I'll have to start doing the groundwork to find a viable, like you mentioned, sponsors, investment managers, and investors, because obviously if you don't have any of those three, you can't start.
Right.
The biggest challenge is finding the investors. How many investors do you need to look for? I mean, that's such a big,
Well, that
field.
depends on on the purchase prices of the property and how much they're willing to deploy. You have to raise the capital plus capex and reserve. So, if it's a $20 million building, we'll probably we'll need to probably do um, 20 million. So that would be 40, um, 400,000, wouldn't it? We'd have to raise. Is that right? No, that's not worth 4 million, isn't it? About 4 million. And then so people come in with 100 or 500 or $1 million. It depends, So um raise that, and then whatever the capex is, we'll decide what the capex is, and then 10% for reserve. So when we do an offering memorandum, we'll go over all those figures with a specific example. So you will get an invite to a Zoom call. You'll see the offering. You'll see what needs to be done, how long it takes to stabilize the project, when you can expect your distributions, what the minimum requirements is. It might be 50, it might be 100K, and so on. So at the end of the offering, you throw your money in, or you decide it's not for you, and we go from there. Go to closing, get paid. So that
So the offering memorandum for average the investor, what's the minimum he has to put into the LP?
realistically, it's going to be 100,000 probably.
Okay.
Yeah,
And you probably need to raise up to, say, what, out of 20 million, maybe uh what,
70%, 70%.
2% of 20 million?
No, 70. We need
17%.
no. We get a conventional loan 70%, 70. So we'll need to rate 30% of 20. So that'd be what, 6 million, wouldn't it?
I see. I see.
Yeah.
Okay. All right. So let me, figure that out. That's
It'd
probably
be,
something.
yeah, and it'd be a little bit more than 6 million because we'd need a capex and we'd need a 10% reserve. And so it'd probably be around 7 million in that example, but um, we don't know until we found a project, because it might need more capex and it might be a new building, and doesn't need much capex, right? So
Sure.
it varies, from project to project. So that's just an example.
So you have, I guess, a track record to show the investors, I guess.
Yes, yes, that'll be coming from the sponsor, you see. He will do all that, the credibility package and everything.
Okay.
Yeah, yeah. The sponsor is the leader. Okay, so we identify the sponsor once they've found a property, and then he will do all the offering memorandum. We'll be on the paperwork as a GP, and that's kind of how it works. These are really good questions. You're obviously know a lot about it, so this will
Well, not really. I mostly right now I'm dealing with some developers,
mm,
and I'm helping them find the construction loans for their projects. It's not just North America, but globally.
right.
So I'm learning along the way, but these are generally large projects. They're not small. They run in
Mm,
the hundreds of millions.
right.
So,
Yeah.
but anyway, the multifamily is an area that the two goals is to acquire some of these properties, and the LPGP. I'm more than willing to look into it if I can work with someone with the experience, and then bring in the capital and be involved in creating such an LP or GP.
Yeah.
But I mean, for our role, then we're just mainly partners in the LP and GP, right? I mean, we'll become GPs in a sense. Is that right?
You wouldn't be a GP unless you particularly wanted to. What role would you play in as a GP? You see, it'd be more on the LP side as a gator wrestler, bringing in the capital. You could help. Well, you could do the GP if you wanted to do the capital raise, but we'd have to think about that. I'm running out of time. So, but one thing I would say, John, you've asked really, really good questions. Join my YouTube channel. Let's keep in touch.
Okay.
Book another call with me, calendly.com, Graham Norris. And I've also put in, I mentioned about legal aid. I would strongly recommend you join and protect yourself in this game. You're a serious player. You are going to be sued, or you are going to want to sue to protect your business. So
Okay.
definitely go to that website, look at what Legal Shield offers, decides what best for you, but it's going to save you a whole bunch of money.
Sure.
So, in the future, and if you don't join, you'll wish you had when you do get sued.
Right.
Telling you. Yeah,
Definitely. Okay.
yeah,
So I will keep in touch and see, if there's any opportunities we can get my feet in.
right.
Okay.
Absolutely. Yes, very good, John. Good talking to you. I'm glad we
All right.
connected. You have a
Thank
great
you.
day. All right, bye bye for now.
Bye bye.